So now I will start. Okay, I'll start tonight's session with what ETH has been doing, because it's a little bit more regular than BTC at the moment, and it has very nice levels. Also, it has clearer signals on the day as to a possible direction. So more like a 60 to 50% chance, but anything can happen in the market, because anything can happen generally, full stop. The principle of uncertainty, and we need to accept it. However, the TA might indicate a certain direction. Now, when we started dropping, and it was, I believe, last Friday, when we started dropping, I was very mindful of ETH's current swing retracement levels. Well, current at that time, because this was the swing up in this slightly ascending channel. It did a beautiful swing up, and I think it's a 1, 2, 3, 4, 5. 3 is a bit weird, but it's not the shortest swing, and it still follows Elliott's rules from this perspective as an impulse. And I was mindful at the weekend because I had seen this on Friday, so this sort of double bottom on the 0.5 correction level. Now, that means there was a fair bit of pushback and a fair bit of support that it found there. Now, you know that I have this. I've noticed this thing on Friday. We have the last 15-minute candle on, and even the last hour. I think more recently I've noticed the 1 hour doing it. The last hour and the last 15-minute candle of the Friday session is the intention for Monday. So the market makers leave the market on Friday where they like to continue on Monday. So they did. Sorry, I have to watch a little bit. I've a trade in XRP that I like to DCA, and when it's gonna do a back test, I'd like to watch it. So I might be stopping for a minute. They on Friday they finished on a down. Saturday, one weekend day continues the trend. We had Saturday continue the trend, and it actually did. Sunday continued the trend. Saturday reversed the trend. Sunday continued the trend, and then Monday. Where's Monday? Monday finishes the trend. So Monday was slightly down. Well, Monday was a weird day. Monday was a very weird day because Monday was a zigzag, and the whole week so far has been zigzag. But the general thing that happens is, on the close of Friday, we see a trend on that final closing of the session. Then we continue that trend either Saturday or Sunday. So one weekend day continues it, one weekend day slightly reverses it, and then Monday finishes that trend off. And that was Monday's. This candle here on Monday finished that downtrend. Now, I would have said this would have been a great, so this push down to the golden pocket would have been a great move for Monday, but Sunday did it rather than Monday. I think it was the Asian session that did it, 8 o'clock, I think so, 10? No, not yet. No, it was the pre-Asian session. This was a pre-Asian session candle. Basically, what I'm trying to flag here in terms of post-week reflections, because I think I mentioned it on Monday in the morning session, but I wanted to repeat it to you. When we see some structure forming on the 0.5 level, I am very doubtful about and suspicious, not because of my general trust issues. Thankfully, yoga's helped me a lot with that. But I seeing support on the 0.5 gives me two ideas. The first one is that the correction might be finished, and the second one is that we might see some sideways or reversal before continuing to the next level. And generally what ETH likes to do, I haven't seen it recently, but I have seen it, I saw it a while back when we had more volatility and in bigger volume. What ETH likes to do is to do short corrections on the 0.5 and the golden pocket, do a triple top structure, and then push down to the next level. This wouldn't be a great, this swing here wouldn't be a great example. Let me just see if I can find something similar in a previous swing, just for the purpose of reflection. I'll use this one. This is no, because this is too shallow. Again, it's one of those spiky rallies. We've had a lot of spiky rallies recently. It's not making my my analysis easier. Maybe this one here. Let's see if this was a one, 2, 3, 4, 5 sort of like swing. Let me see. No, because I can see it. I can see it from a distance. It's not. No, it's again a parabolic beast. Maybe this one here. Let me see. I just want to give you one example so that you visually catch what I mean. Okay, maybe this one at a push. A more recent one is this one, but again, it's a pattern that I've noticed with these, so I'm pretty sure I will notice it quite soon enough to point it out to you. So here's where it stopped at the golden pocket, went up and back tested the 382, but that's not. Yeah, could we take this into? Yeah, we could take this as a triple top. If we take this, for instance, this swing as a 1, maybe the 2 is 2. No, because that would make 3, 4. Very hard to look at this as an impulse because of how spiky the initial one, but probably I'm wrong about the 1, 2. Now 1, 2, 3, 4. Yes, this would be the 1, 2, 3, 4, or even 3 here, 4, 5, and then the correction here, the golden pocket makes another top here as another shoulder to this head, and then comes down to the 786 correction, and this looks like a reversal. And then comes down lower. So that's the kind of pattern that I've seen ETH do. XRP doesn't do it so often. XRP likes to do a straight off 702, 786. So does Bitcoin. ETH loves to do these triple tops, a deeper correction for a triple or a double top. I'll point it out to you when I see them. I think maybe the situation here is quite similar if we take a smaller swing, but how can we read this impulse? This is a very messy impulse to read. Anyways, what I wanted to tell you was that we had a suspicious situation here, and this situation can mean two things: either reversal or another top formation before a deeper correction. So where this is relevant to the levels that we're going to discuss this week, I'm going to change to our level page. Here is our level page. So I'm going to remove the fibs because we've seen where we have gone to, the golden pocket at the moment. We consolidated on the 0.5. We know where we are in terms of correction. So this would be enough. Technically, this would be enough for continuation to the upside, which means another leg up. Now, Friday is a run for profit. Where do I started by mapping out very conservative levels on Friday, and then Friday proved me wrong a couple of times, and then I started being more generous with them, and now I find myself in the more conservative space because again we have lower volume. So I expect today and tomorrow to make a run for profit and do a top here at 17.20. Again, this would be, if you're in a short, this would be a great place to DCA if your funds would allow it. This is where I would DCA if I were doing a DCA type of trade and not a tight stop loss type of trade. So this would be, because with a double top formation like this, a deeper correction is in store. If it does a higher high here and this proves out to have been a 1, 2, 3, 4, 5, or even a grander scale. Now, what I have in mind in terms of the 4 hour, and mind you, this consolidation has been, let's be positive tonight and say educational rather than patience testing. But what I have in mind for this, I'm sorry, I am a little, my mind, finally. So I was thinking along the lines of a bigger 1, 2, 3, 4. If we do a higher high, I know we've done a higher high here, so this could be the 5. But if we do a higher high here, using our technical target there. So if this were a 1, 2, 3, 4, 5, and after that we are going for correction. Even from the third top here, if we are to do a third top, the correction would be, because at the moment we've only had a 382. This is too shallow. I know in bull times we could have a shallower correction, absolutely. But in bear times, just this correction is a little bit too shallow for continuation. We would need a deeper one. We're not yet in parabolic runs in the bull market to do shallow corrections and continue up like we just don't care about sustainability of a swing. We are still in bear times, so I believe a correction is still due. Now, if we are to just be conservative about the correction to the 0.5 from a triple top here, then the correction from there to a 0.5 would be a 20%. A 786 correction would be 30%. A back to base correction would be 40%, and ETH loves going back to base. Now this would be our grander arc. So if this is 3 steps up, then we're looking at 3 steps down here on the 4 hour time frame. I believe the 4 hour time frame is at play. Even though I have the 1 hour color code for the arcs, this would be a 4 hour arc with the 3 steps up and the 3 steps down, and then playing out consolidation there, and eventually maybe in 3 to 6 months, we're March, yes, September, we would be looking at a possible breakout out of the bear market in 2024, I believe, towards the end of the year. But that would be, again, a series of a 4 hour arc lasts about 3 to 4 months, so we would have a series of them. Like this was a 4 hour arc, October to January, that's it. because of the low volume, I color coded as a 1 hour one, but it's actually a 4 hour one. Anyways, back to the main idea. Where are we going this Friday? Where are we going this weekend? Actually, this is a great idea. I'll make a note for it. On Monday, I will do, if there's no commotion happening this weekend with a breakout or a breakdown or something crazy happening today, tomorrow, I will be doing an analysis on Monday, because we don't have a trade setup per se, because we're in the same space, so it's the same setup for our trades. But since I have time on Monday for that, I will do a longer term analysis of where this might be going on the 4 hour arc play. And that would be a sort of like a longer yearly analysis, because again, we are 3 months, 2 months, the start of the third into the new year. So it's nice to see what the arcs on the 4 hour would be saying at this time for the next 3 to 4 months. Okay, so now looking at our levels, this would be the rectangle for our levels. Now, why here? Because this is our previous low, so this would be our validation or invalidation for the next move. Now we have 3 lines that we need to keep in mind. The green line here is the resistance line, and the breaking the resistance, the peak formation resistance here, means we're breaking up into the peak formation space. Breaking up into the peak formation space opens our eyes to new horizons for higher peaks. Sorry, don't know why my humor kicked in there, probably because of slight tiredness. Here we have the resistance line at 1720. If we do break this red line, which was the support for the peak formation, which confirmed that we're going in for the correction, and we have done the correction. So the correction so far is a 0.5 or golden pocket for this swing. That correction ensures that we might be going up for a lower high or a higher high. That is to be seen. It might be an A. I know it's wonky because it's the sideways space. A, B, a lower high, and then a C for the 786 of the previous swing, which is, I believe, on our yellow line. So this one here is our greater swing that we still haven't corrected. The greater swing still hasn't corrected, and for the greater swing peak formation to be broken, we need to break this previous low here. So we need to break the previous 382, and then the 05 at 1400 or the golden pocket at 1300 are on the table as possibilities. But so far, as long as we're holding the previous low here and the previous low here, we can be talking about going deeper than this, range wise. And I know again, I like to do my TA step by step because of what I see in front of my eyes in the charts, not what I imagine might happen. Because if we use our imagination, we'll say that we're going for a 100k Bitcoin when we still haven't even broken the 30k. So that's where I stand in terms of such predictions. I'd like to make the projections based on the levels that we're breaking. And even trading the day, there are still levels that you can anticipate in measured targets rather than, eyeballing it. Anyways, sorry, that's my inner critic kicking in there for the YouTubers. So these are the levels for ETH. Today's session is weekend levels, and then I'll show you my XRP trades that I made this week on the range, so that we reflect together on what trading possibilities we had this week and where the traps were, because there were some traps as well. I got caught in a trap last night, and I'll be honest and confess it, because I think it's a learning occasion for everybody. So here are the levels between 1720 and 1550, about 170. Great range to trade. Now we're in the middle of the range at the moment. So in the middle of this range, we don't have a trade, because this line can get rejected and we can head on down to the bottom of the range at 1520 to have a double bottom situation, because at the moment it's a V-shaped recovery. It's also a rounded bottom, but I'll call it more a V-shape because this has only made a golden pocket retracement, not a 702. The golden pocket is a little bit too steep for my taste, so it is a rounded bottom. So I call the rounded bottom if I had, for instance, a 702 or a 786. I know I'm picky, but that's my way of calling it. And fortunately, we don't have, there we go, we don't have those rules in black and white, or at least I haven't seen them. So that would be my rounded bottom. Here, it's a V shape because it had a steeper angle and a shallower correction. Okay, so in the middle of this range, we're holding back. We, again, if I were trading, I would be taking longs either here on this purple line, or in line with the previous bottom here. So right at the 236 level here of the bigger correction. Now, longs there, shorts at the top only here. It would be a great shorting opportunity from a triple top or a double top formation. Okay, now for BTC, let's see the same levels. Thank you. We'll see the same levels on our chart. Using again, BTC has been especially spiky within this range. We've had a confirmation here, and similarly to ETH, it did do the catching of the shorts trap as well. Came down, but it came down to the same level. So ETH was a little bit more devious because it came to the 0.5 and then went down another level. So it trapped them twice. But BTC only did a straight off golden pocket, golden pocket, golden pocket, triple bottom. Now this is a rounded bottom. This is a triple bottom, bottoming out structure at the moment. It backtested the 382 and it is rejected at it at the moment. So what I expect tomorrow is more sideways in this space. There is a bit of a where's my rectangle? Sorry, it's making me laugh here. Now, here are the weekend levels. Again, we can see a lift up into this space because from the golden pocket, we might see a bounce to do a double bottoms, a double top structure, and the double top would be in the shape of an M formation, preparing for a bigger correction down. But again, we'll talk about that correction. I will switch to the 4 hour because this would be a 4 hour M formation, and it would take us down to probably the 20k area. If it breaks down, that would be a greater M formation, and we do have a level of support there, and there is also liquidity there to be collected from all the longs that have started in this region. Okay, so that would be a massive drop from that level down to 20k, 20%. And yes, we were talking about the stock market resetting 20%. If the stock market resets 20%, I think crypto would go even deeper. It would be 40% down to where this swing started, the 16k level for BTC, but we could go lower and do that third lower low. Now, these would be the levels for BTC. I'll put them up tomorrow morning, and I will label them a little bit more clearly with names and everything. But that's again the space that I see it moving between maybe back testing the 25 and or coming back down for a deeper correction to the 22.4. There's still liquidity at the 22.4 area, but at the moment the market makers are not interested in that. I think they're quite interested in building their shorts at the moment, and they do that on the way up, because they're the ones selling on the way up. I will reassess this target to 28.6, 29k, because now this will be the consolidation. So this would be the V, or the sideways consolidation space that it's in. So this would be the measured target now because of the recent drop. It's not just this, it's the whole channel from the 25.2 to the 22.8 because of this triple bottom formation here. Okay, so these are the two spaces that I wanted us to look at and to have mapped out before tomorrow's session. Let's see where we are with the S&P. The S&P has seen a bounce today. Yesterday, I was telling you before the day that we have seen a rejection from the 200 EMA, which is really, really severe. That 50 push down, the 5 push down, the 13 is coming down to push. Again, in this context, I don't see the S&P not touching the golden pocket of this correction. I find it suspicious that it hasn't, especially because it broke through the 0.5 very, very smoothly on Friday last week, and it continued the downwards trend. It had one day on Monday, fake Monday, lifted and then pushed down. Again, it's hard from this M formation. We have level 1, level 2. This could be level 3, but I don't see any reason why we wouldn't go as low as the golden pocket 0618. We haven't touched it yet, so that to me is quite irrelevant. On the stock RSI, it averted a push down, and now as we are close to closing the session, we're 1 hour before the closing of the day, 1 hour and 13 minutes before the closing of the day. The stochastic on the daily is lifting up, so we could see a lift up again back to the 50 EMA, the 200 EMA, to just consolidate this W formation If it is a W formation, if it isn't just another back test and then another fail down to the 786, and if it does that, if it does another back test here down to the 786, it would be a 4% drop in this correction. But what is more worrying is, not necessarily worrying, what is indicating more downturn is that it would be breaking this divergence line, so it would be back in this space, and being back in this space means another 5% to the next support line, another 11% to the next support line, and 17% back into the bottom of the daily channel. 1, 2, 3, 4, 5, 6, 7, 8, 4 complete swings up and down, that would mean. So we still have to confirm getting through those levels, and I like to take it each day at a time because again, of where we are and how heavily the market is manipulated, especially when there are lower volumes in the market. And the trend is saying we're coming down, but the momentary immediate market maker reaction is pushing this up. Now, that's the downwards possibility. The upwards possibility is quite obvious. We retrace back onto the 200 EMA and the 50 EMA on the daily. If we reach the 40-20 area, 14-14 to be more conservative, and we close above them tomorrow, we're looking great for Monday for continuation to the upside. That's my invalidation line for the S&P on the daily. And until that happens, we're going to continue lower. The DXY has printed a lower high for the moment. Still 4 hours to go in the DXY because it's more of an index and there are other Asian currencies involved in it. It starts around Asian time, finishes around the start of Asian time. So still 4 hours to go in the DXY. The 12-hour is going up, and the day was coming down quite aggressively. So with the day down and the 12-hour up sideways is probably going to be the trend, which leaves it open for the S&P and the coins to do their thing. So that's where the DXY is at the moment. It's closing above the 200, which means it's holding great support, but it's not printing higher highs on the daily. Not printing higher highs on the daily gave us higher lows on the daily for our coins. So the coins are doing sideways at the bottom of the structure, whereas the DXY is doing sideways at the top. They're contradictory, inversely correlated. So if the DXY reverses from here and starts pushing down, that gives us that third top for BTC and ETH that we might be having. Okay, now just a second, I'm watching this XRP trade. It has back tested on the EMA at the moment. I'm waiting to see if there's going to be a 702 there for my DCA. Even the golden pocket here would be 37.7. Yeah, 37.7, 37.8 would be a good level. Okay, now I've smoothly transitioned to XRP to show you the trades that I made this week. Now I'm going to take just a quick mental break on the 1 hour chart to remember them. Okay. Okay, so this one here was the XRP range, not too glorious, 2% up and down. If we are to take the core range, which is what we should be considering when range trading, this range extended when the 200 when the 200 when the 200, I'm joking, Roy's taking supplements really loudly right now and I'm making killing noises to him. He's never quiet as a mouse. He's like a cat, throwing things about and intentionally making noise to attract attention. That is his spirit animal, a loud cat. Okay, so I made 4 trades. I'm in the 5th one today. Not a glorious range, but again, the profit adds up, and it's easy enough to be making profit, especially using a 702 entry point. I used the 702 entry point here on Tuesday. This one, oh no, sorry, this one was the first one, Monday and Tuesday for longs. So this here was the first one, right to the top of the range. I remember here I put it slightly lower and then I had to manually take profit here. It wasn't great, was about 15%. But it was a clear, here was a clear backtest of this line. I had an order. This didn't offer a 702. I just went in on the support here. This one here offered a 702. London was great at offering these entries in the morning at about 9. There it is. Yeah, 9 o'clock in the morning here. 9 o'clock in the morning on Tuesday. 2 nice longs. This one here was a short, and it was a beautiful 702. And this one was it. I believe was the Asian, yes, New York and the Asian transition, and it was good because these were my active hours, so I didn't have to stay up late for days. And again, tight stop losses on both of them before below the previous low. There we go. Yes, here I put it. I remember here was a tight one because the 702, the 10 points were really close to where it got to, but it didn't reach it. So it was the highest here was 37.97, and this one got to 37.98, just a tiny bit above. Yeah, no, 38. So I was 7 points short. So 1, 2, 3. Again, 15. I only took 15 from here because I did manually, but this one gave me the full 20. However, these were great, but this one here caught me. What happened here was I entered here on a 702. I put my stop loss at 38.45. 38.45. I stayed in for all of this, went to bed here, and here it is going to 38.45, knocking me out just to come down. And I woke up this morning and I was looking at Roy's chart. He had a channel and I could see that it didn't break out at that channel, and I was confident, okay, we didn't break out that channel, happy days, we're still coming down. I saw beautiful red candles, and then I checked my phone and there was my notification, you know, the orders were bought at 38.45. And the story here, the reason why I'm telling you this is because I don't regret, as much as I am annoyed, I don't regret keeping such a tight stop loss, because that actually protected my profits here. I made small profits here. Well, together they were 55%. But had I moved my stop loss here, I would have lost more than these, and it was a lucky week to be making this up and down. However, if I had moved the stop loss, I would have given in. If it had gone higher, I would have lost more. So I don't regret sticking to the tight stop loss strategy because it worked so well here. It didn't work so well there. Now, that was one of my reflections. And again, I looked at my MAs. There were some MAs on the 4 hour that I was looking at, the 50, and I think that the EMA as well, and the levels, the M4 level there for yesterday. But that's what it is, and I believe that sticking to the strategy and allowed me to be more relaxed trading this narrow range and catching the profits and not risking losing my profits when the winning range wasn't this great. So with a 20%, it's a 4-to-1. Let's say 15% if you're closing manual, but it can be even a 2-to-1 range if the, for instance, here, if you're entering here, it's such a small short trade to make. So it's worth protecting the position more than anything in this situation where we are in this tight space. So that's me. I'll be putting up the levels tomorrow morning. I'll be putting up this session as well. Let's see where tomorrow takes us. We have, by the way, tomorrow we have news coming out tomorrow, and it is connected to inflation, the ISM PMI, and it is an indicator of economic health. And we also have the FOMC and the Fed monetary policy report. It's not yet color coded. I would say this is quite relevant. Let's see what we're gonna have. I also have to check in the morning. I'll be checking what FOMC member Waller and member Kashari said today, because I think they're quite relevant for the market in terms of sentiment. So not necessarily volatility, but the sentiment. Where is the sentiment gonna take us this month? I will see you guys on Monday in the live session, and until Monday, I'll see you in the chats in Discord. Thank you.